Good morning, Bay Area. This is your Bay Area mortgage planner, John Payne, and this is the RateWatch Now Daily Update Report. Happy Friday, everyone. Snapshot of yesterday's mortgage-backed securities market. We escaped a bullet yesterday. I'll have more on that, but you can see we were dropping, and we recovered just a little bit, and we ended up okay. And I'll get more into that with the graph in a moment. What's going to make rates go up today? I had to search, and I came up with some corporate earnings. Basically, technology driven. Technology is very profitable with the likes of Apple, BlackBerry. These devices have just become so mainstream in our life right now, and they're doing quite well. What's going to make rates go down? CPI came out. Absolutely zero inflation. However, it does create deflation concerns. Consumers are feeling really bad. The Michigan consumer sentiment came out today. This is really testing consumers' confidence. It's not a prediction, but it does tell how we feel. Like I needed an index to tell us that, but consumers are feeling really, really bad right now. And we have more Euro concerns with Ireland coming out with possible issues of needing money, and this could spark problems and cause a flight to quality back to U.S. bonds. Here is a snapshot of CPI. It's not actually updated. We're closer to zero than this, but you can see that 15 years we haven't seen inflation this low. We continue to model and mirror the 1930s and 1940 post-depression era, where 30-year fixed rates were at the 3% range. So that's why I'm really still bullish about what's going on with mortgage rates. Here is the University of Michigan consumer confidence. Now, if you would take a line and draw it across the 60 mark, you will see, with the exception of the recession era, that we hadn't been this low since the recession. So it's been a long time since we felt this low as a consumer group about what's going on in the economy. So with consumers feeling bad and with no inflation, that's the recipe for low rates. So those are the two reasons why I feel very, very bullish about rates going forward. Here is what's going on today thus so far. Started open, went down a little bit. I think we're going to see this sideways trading for the rest of the day. I do believe, though, we would probably end up above the 102.56 where we opened up today. You can see how the lenders are responding to the news. 15 lenders have repriced for the better at 12 basis points. Here's the arrow again. And again, it's showing the same way on the long-term charts, of course, and it's showing the same way on the bonds, on the treasury bonds. So I'm only going to show this chart here. But you can see yesterday where I was talking about how we started out way below this floor, and we went way past the upward trend. And we actually closed right above it, which was a lifesaver for us, because had not, we would have kept on falling. And today we've already tested the upward trend, so we're still doing this sideways trading, which makes it really hard to predict when you do sideways tradings, because any little thing, any little notion can make it swing either way. But I do believe, again, I'm a bullish person. I do believe that we're going to blow through this and come up above. In summary, I have inflation is still off the table. This pleases both the equities and the fixed income, so you'll see a rally in both bonds and in the stock market. So that's going to be a good thing. Normally they don't move the same way, but whenever you get news of no inflation, they're both going to move the same way. Deflation is still on the table. Consumers are feeling recession level bad. And Ireland can spark some new flight to safety buying, which would be good for bonds. And we dodged a bullet yesterday when we tested the floor at 102 and a quarter. And I think I mentioned that all. But we held that, so that was a really good thing. And we also snuck up and closed above the floor as well as the upward trend. Oh, and the market is still sideways, so some volatility, and it's really tough to call. That's all I have for you on this Friday. Please make it a great weekend. Enjoy yourself. Winter is fall rather is still upon us, and football season is back. So I'm a happy camper. If you know of anyone that could benefit from my morning updates, please Bay Area, pay it forward. Until Monday.